What is going on, ladies and gentlemen? How are we doing? Welcome back to the channel. Happy to have you. Happy Money Monday. It's October 18th. We're just approaching noon. Some good opportunities out here today, but you got to have that patient mindset. Look at the big picture. A lot of big picture type of plays. So you're learning to be a day trader. You're in the early stages of your career. There's a lot of frustrations. You find yourself failing. You're consistently bleeding out that account. You get a couple winners just to keep you interested in this. But you find yourself failing and failing and failing. It can get frustrating. I know. I've been there. If this was easy, everybody would be doing this. But 90% of people fail and lose money consistently in the stock market. We're going to talk about some stuff, dive into some psychology, emotions, going off of the title of this video, building confidence, day trading. It's a long process and a journey to get to being a consistently profitable trader. Very few reach this level. Very few. Remember, 90% of people fail and lose money consistently in this game. So as you're new and you're coming into this, you're watching all types of different YouTube videos, tutorial videos, and you're on Twitter, Facebook groups, Reddit, seeing what everybody is saying about the stock market and how to go about it. Now remember, and I'm going to repeat several times throughout this video, 90% of people consistently lose money as traders and investors. So that high percentage failure rate of day traders out there, you should ask yourself, should I be listening to this person? Does this person have any value I can gain from this? We know habits are hard to break. Drug addicts get hooked on drugs. It's that mindset. You can't break it. They get hooked on drugs, then they're dependent on it. Smokers, you smoke cigarettes or you're a vapor. It's a habit. It's a very bad habit to break. So learning anything new when you're just starting out, if you're learning from the wrong person, you're picking up on bad habits. And those bad habits down the road are going to be hard to break. In the stock market, with a lot of gurus out there, they teach a lot of people to buy high of day breakouts. But that's where a lot of people get stuffed, and then they end up becoming bag holders and swing traders, long-term investors. We see stocks all the time come up, test high of day, fail and fall back down. Come up, test high of day, fail, come back down. So you got to learn to train your eyes and see it before it happens. Think of where people are trapped on a chart. Think of how short traders are thinking, long traders are thinking. We got MGTX here today going on a good run from $16.50 running up to a high of $19. So a $2.50 move to the upside. And there were a few other good opportunities out here today as well we'll talk about. But MGTX, you're not really going to see many people talking about this specific stock today. MGTX, today volume so far, it's only got 4.8 million in volume. So almost 5 million in volume on the day. Not many people are paying attention to this stock compared to stocks like This stock's ran gapping up from $1.40, hitting a high of 220. And since the open, it's just been in a back and forth range of 20 pennies. And it's got 80 million in volume. 80 million. That's a lot of volume on a little small cap stock. So the way I look at it, the more volume that's in on a stock, it just leads to overcrowded. You go into a room, there's a lot of people, and it's a small room, you're going to get cramped, and you're going to get uncomfortable. With stocks, overcrowded stocks, you have so many different personalities, trading strategies, so much is going on, it's just going to lead to randomness, and it's going to be really hard to trade that stock. So I specifically try to stay away from overcrowded stocks. So most of the time, the top stock gapping up pre-market, I won't even pay attention to for the entire day because I already know it's going to be overcrowded and it's going to be untradeable. JSPR from Friday. This one got a lot of people excited. They pop it up pre-market right before the market opens. Literally minutes before the market opens, they rip it from $12 all the way up to $18.50. That's a huge move right before the open. What is that? A $6 move to the upside right before the open. So people pre-market see something like this pop up, JSPR, running from $12 to $16 in just a few minutes before the open. What's that going to do to your emotions? It's going to trigger it. That adrenaline's going to kick in. You're going to get excited. Your eyes are going to get big. And you're going to go, whoa, this stock can rip. I can make a lot of money in a short amount of time. All I got to do is catch one big spike on this, and I'm in the money. So they get everybody excited. Their adrenaline's rushing. I like to say the emotions are taking over. You're trading for the thrill, right? So as soon as that bell rings, 9:30, ding, 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 this thing just starts ripping from 18 to 18.25. Then they slam it down to 16.50. That's a $1.50 rip to the downside right out of the open. They rip it back up. Test high of day again. Fails, falls back down. And trading right out of the open, things happen so fast. You could be up one moment, you blink, and then you're down double than what you were up. So you could be up 1,000, and then you blink, then you're down 2,000. And then things are happening so fast, you can find yourself at times, you freeze up. You're frozen. You don't know what to do. Then you watch the stock dive down even deeper. Then your loss goes from 2,000 to 5,000, 7,000, 8,000. Now your heart drops, right? Market hasn't even been open 5 minutes and you've already blown up your account. So stay away from these stocks that perk your emotions, your adrenaline, get you excited. You have to recognize your emotional state at the current state of time right now. So trading that open, you hear a lot of great traders out there. They'll tell you, you want to trade as early as possible, get that money and get out. The best time to trade is from 9:30 to 10:30. You'll hear a lot of traders tell you that. What I like to do, my hands are off the mouse and the keyboard that first 10 to 15, 20 minutes. I don't want to trade the open. That's too unpredictable. We do not know truly which way a stock wants to go when that bell rings. It's a 50-50 gamble. It could either continue ripping up or it could fall down and crumble. From my experience, a lot of stocks that have big rips like this to the upside right before the bell, market makers are just trying to cash in. They're just trying to get people excited. Everybody chases after it, and then they fade it all the way back down to where it came from. You'll see this a lot of times. So going back to what we were just talking about, you're new, you're going through all of these struggles, you find yourself failing. Oh, you get a winner. Oh, fail. It can be aggravating and frustrating, I know, but you're getting in that experience. There's so many different scenarios that you haven't witnessed in the stock market, and so many beliefs that you haven't even tapped into yet. You need to get that screen time under your belt, see these moves a few times, and get familiar with the environment, right? That's like me taking a city boy from New York City who works in the World Empire State Building. He's an office guy. And I take him and I just drop him off in Alaska out in the middle of the wilderness. Doesn't know what to do, how to survive. He's going to fail miserably. Probably end up dying, right? There's so many things you have to learn and adapt to in this game. Self-discipline, knowing when to pull the trigger, when to trade, when to be in a trade, all that different stuff. It all comes with time. One of my favorite sayings I like to say to you guys, and you guys seen me say this multiple times before, how badly do you want this? How badly do you want this? Are you willing to dedicate yourself to studying and not making money your first 1 to 2 years to learn this game and get good at it, to have that financial freedom down the road? The thing is, with day trading, you got to put that time and work in, and it's free. 1, 2 years, maybe even 3 years for some of you, because we all learn at different levels. So that when you're just starting out, year 1 to year 3, money should not be on your mind. Learning, knowledge should be on your mind. This is a game you work your butt off and study your butt off to learn, and this will pay off in dividends down the road. You get that? And the dividends is financial freedom. That's what you're working for. It's like an intern. They volunteer their time to learn the game or learn the job, to be better at the job, to get paid, right? To get a better position. They're not educated in the field, in the workforce. So they're just dedicating their time to get used to the environment and get a better position when it comes to that time. So day in and day out, and I've been making YouTube videos here for over 3 years now, I think. YouTube videos. So I have over 600 videos on my channel, guys. And all of my videos, you're going to see me pull up these stocks and show you guys opportunity after opportunity after opportunity. Every day and every week, the stock market offers us opportunity. It does. As long as I have been around, you guys, the stock market has always given me 1 or more opportunities a week to make money. The only thing is, I have to wait for that opportunity to present itself. It could be Monday, Tuesday, Wednesday, Thursday, maybe Friday. Who knows? But my job is to show up, wait, and I will know when a stock is tradable. I've said to you guys as well, you'll know when a stock is tradable. It'll be blowing air horns in your face and kicking you in your shins. Trade me. And it's one of my other favorite sayings too, you guys. Trading should be effortless and easy. Like walking over to the other side of the room and simply picking up money off the floor. That's how effortless and easy trading should be. But yet, I see a lot of people come into this and they statistically try to break every little detail down into statistics, overcomplicate things, and just make it harder on themselves. And then they wonder why they struggle so much. This job, it's literally not that hard, guys. It's not. Technical analysis and determining which direction a stock wants to go, it's not hard. It's not. Anybody can learn technical analysis. It's the easiest thing, and I'm not exaggerating. The hardest thing to master is yourself, knowing yourself, because you hold all the secrets. You do. Your strengths, your weaknesses, over the course of time of showing up every day and being very self-aware of the feelings you're going through, the thoughts that are running through your mind. While these tickers and stocks are moving real time, are going to tell you a lot about yourself. And you need to pay attention to what you are telling yourself as you're buying at high of day and the stock pulls back down $1. Then you add on to your loser and it pulls back down even more. There's so many different scenarios and ways to go about this. I remember when I was new, I would always tell myself, man, there's gotta be a secret indicator out there or a secret strategy that all of these professional day traders are using, but they're not telling us, the public. They're hiding it and guarding it with their life. There is no secret, guys. There's not. I would buy all these different trading DVDs. I would buy Tim Sykes' Investors Underground. I joined up with My Investment Club. And these trading DVDs, they sell them for $800, $1,000. So they're not cheap. And I would always watch them and be excited because I was finally thinking I'm going to learn the secret, what these guys are hiding from the public. But yet, all it would be was just their daily routine, how they would set up their charts, and they would just teach the basics, basic technical analysis. And I'm like, dude, I could have just watched your YouTube videos and learned all of this. So it's the process, you guys. It's the process. The longer you do this, you will grow and you will start to understand. And you'll look back at yourself when you were just starting out and new. And you'll be like, yeah, I can't believe what I was thinking when I was brand new. The stock market has opened my eyes and my brain to unlimited opportunities, and who knows how far this will take me. Russell Pankin learned more in 5 minutes than my total knowledge. Appreciate it, my man. I'll be honest with you in 100%. Here, I tell it like it is, straight up. You will not hear anybody out there tell you guys or teach you guys what I talk about? Nobody. Because everybody tries to sucker everybody in with technical analysis because that's the easy way to go about it. Now, it's a little bit more harder when you tell people, hey, all the secrets lie within you. It's psychology, emotional intelligence, self-discipline. You need to work on yourself, be very observant, know your weaknesses, your strengths, and then from that is where you start evolving your trading style and the setups that you personally like to trade. I get asked the question all the time, Hey, if I join your Discord, do you give buy and sell alerts? My answer to that, simply, no. This is not an alert service. I don't want to have people rely on me to make them money. Because what if I go on vacation? Or what if I want to take the day off? You know? People can get really, really aggressive too when they don't have a consistent money flow coming in. It's much more satisfying to teach somebody and for them to see a setup that they like and that revolves around the type of person that they are, execute that trade, and pull money out of the stock market. Not just that once, but consistently pull money out of the stock market with the own strategy that they've themselves developed. That's more satisfying. And then you'll be able to do this from anywhere in the world. That's the most beautiful thing the stock market gives us. This is a skill that we will have for the rest of our lives, and we can take it with us wherever we go. All we need is an internet connection and a brokerage. That's it. So we had the pre-market watch list this morning. Every single morning, right before the market opens, you guys, in the Discord, if you guys are not in the Discord here at Trading Learning 101, there should be a link down in the video description to this Discord. For free, every day, guys, I post my daily watch list. Today, we had HX, DATS, GREE, JSPR, NRXP, GWH, AEHR, BBIG on this morning's watch list. For me, I'm a type of trader. I like to have a variety when I'm in the markets. I like to have my eyes on 10, 15 stocks because I like to see how all these different stocks like to set up and which ones could set up that offer the best risk versus reward opportunity. So let's take a look at some of these stocks that I've had on watch. And what I'll do is every day I have a dedicated monitor with 15 charts here. So I can have my eyes on 15 different stocks right when that market opens. I'll put them up and then I'll just zoom out on them like so. Let this market open up, let about 10, 20 minutes go by and see how these set up. And then I'll naturally gravitate to the ones that catch my eye. Like, ooh, this one looks good. It's setting up. And what I try to look out for is how much potential upwards opportunity does this stock have versus downside risk. And that's what I compare it off of. So today, we had GREE on the watch list this morning. And if you look at GREE on the bigger time frame, let's pull that up. So here on the 10-minute on GREE, you can see the stock recently got hammered down. From $60, it got hammered all the way down to this $22 level. And it started to flatline at that 22, getting a nice few pops off of it from 22 up to $34. That's a good $12 run right there. From 22 up to 28. That's a nice $6 run right there. From there to there, there to there. Nice little one there. And one nice little pop right there before falling down here and then getting a nice bounce back on up. I try to zoom out and pay attention to the big picture with these types of stocks. I'm not focusing on specific prices. I'm paying attention to general areas. I could see clear as day this stock, it's not really going down any lower. It did go down lower here, but it didn't trend down dramatically like it did right here from 60 to 22. That's a pretty big pullback. Pretty big. Then this stock comes back and it wants to hold up right here at 24. You can see that right there. So the stock comes back, perks back up, and now it's pulling back. And every time it perks up and pulls back, it perks up a little bit higher. Pulls back, perks up a little bit higher. So this stock is telling me, hey, I'm bullish. Pay attention to the bigger picture. This stock recently fell down $40 per share. It had a long phase of consolidation. It's setting up and gearing up for a nice bounce to the upside, at least potentially up to this red line up here. And from measuring this from here down to the low, that red line, that's around a 50% bounce from the highs to the lows. I'm a big fan of measuring moves. You'll see me a lot of times. I like to use Fibonacci and measure from areas a stock broke down from, or from its highs down to its lows. Measure and look for areas of interest of upwards potential. Technical analysis, you guys, it's not a science. It's not. Technical analysis, you shouldn't be so technical and serious with it. Have fun with it. It's art. I always say technical analysis is an art form. Have fun with it. Don't take it too seriously. And that's why a lot of people fail. They try to get too technical with it, pinpoint it down to the exact number, and they overstress themselves, like drawing this out, and they see resistance. Well, resistance is at $30.15. So that's going to be my exact resistance, $30.15. And then from there, $35.14. That's my exact resistance. No, dude. Pay attention to general psychological levels, like 34 whole level. Pay attention to how a stock reacts at that level. Does it like to go up above that 34 and hold above it? Or does it get just up above 34 and then crumble and fall back down below it? Pay attention. Paying attention to the smallest details, guys, goes a long way. It really does. And that's where candlestick charts really shine, is when you really pay attention to the small details. GREE on Friday. Nice good ramp from 22, 23. Runs all the way up to 25 bucks. Let's zoom in on this. So let me get my marker. GREE. So here at $23. Now I can draw my resistance at that 23, right? 23 bucks right there, my red line. See how several times this stock, it poked right up above that 23, but could not hold above it, could it? Right there, plain as day, guys. It couldn't even hold above $23, that whole dollar level. So it crumbles down and falls apart here, and what that does, it traps shorts. Shorts are looking at this. They see it failed to break out high of day twice, 3 times actually. They're like, yeah, this thing's weak. We can short this to the downside and make money. And every short is like, bet, let's do it. So they overcrowd it. Overcrowd GREE. They all short it, and it starts to trickle down. And then it goes into this sideways consolidation. And then it comes right back up to the area where shorts entered in on it. And shorts now, they're putting their risk at the high up here. So short sellers, when stocks go up higher, they're losing money. They make money when stocks go lower. And when they have to cover, they have to buy to cover their position. So then, this is one of my favorite plays, a double whammy, I like to call it, a short squeeze. When you have short sellers buying to cover, and when you have retail investors coming in and they're buying, it's a double whammy. And I've even made a double whammy picture. This is one of my favorite plays. This is where psychological thinking, how a short thinks and how a long thinks, and using it and putting together technical analysis. This is where it pays off being a day trader. Knowing how these two think, and you plan it out and see it before it happens. Now we're breaking this down. We're learning it, you guys. This is how we prepare for the future. So if we see something like this set up again, it'll trigger in our head, hey, I've seen this before. I've broke this down before. So this image is burnt into my head. And then that's when it comes, seeing it before it happens. You're the smart money. And that's where we bank, right? You guys in the Discord know what I'm talking about. So, of course, we got someone in here promoting and pumping Bitcoin. So with GREE coming right back up, shorts are sweating now. They're like, oh, snap, it's not going any lower. I'm actually coming back up to my entry price. If it goes up any higher, I have to cover. Stocks creeping up, creeping up, creeping up. And then look at all this volume come into it. Retail investors come in. Short sellers have to buy and cover. Double whammy. Boom. Stock explodes from 23 all the way up to 25.50. Just like that at the end of the day. Nice, great end of the day run. And then the rest of the day, what do? They just linger it around in this range from 24.25 to 25. So nice 75 cent. They linger it around up here. Just back and forth. Boom, 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 boom. So then going into today, after the stock squeezed, what happened? stock gets a pullback back down to here, 2350s, rips back up, and notice this blue dotted line here. This blue dotted line is where this stock closed the previous day. So GREE, the previous trading day, it closed at 24.27. That's what this blue dotted line is. And a lot of traders out there, they'll have either the previous day's closing price plotted on their chart, or they'll have the opening price, the opening trading day's price plotted on their chart. Street Smart Edge, I'm not able to plot out where the stock opened at today, but this stock opened up here at 2387 there, where that green line is. So this comes down, comes right, that green candle comes right up to our green line, that opening price, right? So now the stock is battling to go from red to green on the opening price. Once it does that, then it pushes up to its next level, the previous day's close, right? This blue dotted line. Now the stock pulls back. Oh, and look, now the stock's holding its opening price as support. So the stock is slowly moving in levels up. You see how it's doing that? That's showing strength. And you see how I'm noticing all of these little small details. It's battling with the opening price. All right, it got up over that opening price. Now it's holding the opening price as support. Now it's finding the previous day's close as resistance. Now it's pulling back and it's holding the opening price as support. It's gearing up and pushing up in levels, building up that strength for a move. When stocks pull back, that's good, guys. That's healthy when stocks pull back, especially at key levels. So it pulls back to the previous, or the opening, today's opening price, holds as support, and from that pushes up through the previous day's close at 24.25, goes on a nice run and tops out at 26. A nice, from 24.25 to 26. That's a $1.75 run to the upside. Right there, all within, what, 10 minutes maybe? 15 minutes? Then, nice tight pullback here. Nice little down channel. Then it starts to flatline right near this $25 level, I'll say. 25 bucks. And then from 25, look, this thing runs up to 26.25. So then there, right there, is another $1.25 opportunity. So you see, technical, and this is just having fun with technical analysis. And all I'm really doing, you guys, I'm paying attention to little details. Where the stock opened up for today, the price, that green line. The blue dotted line is the previous day's close. Whole numbers like 24, 25, 26. Putting it together. Drawing out my lines. Lower highs, lower lows. Just don't overcomplicate things. And I get it. When you're new, you can't really put this together that quickly or on the fly because you just haven't seen this stuff before. So you have no experience, right? You have nothing to go off of. So all this is new, and your mind is everywhere and your eyes are everywhere. You're freaking out. Then what should you be doing? You should be sitting on your hands and just watching. You know? Get this epic pen. I'm not paid to sponsor these guys, so I'm not getting paid to promote these guys, which is actually a good idea. I should contact these guys. I use this pen every day. Get yourself this epic pen and just sit here and draw out lines. What do you see? And then over the course of time, you'll get better, you'll get faster, you'll start to see things over and over and over again. But it all comes with time, you guys. I see way too many people come into this. They think they can quickly learn it in a few weeks and then they could just start consistently making money. And it's like, no, dude, you got to do this for like a year, 2 years straight without making money. And they're like, what? I'm not about to sit here for 4 or 5 hours a day for free and not make money. You crazy? I'm going to go back and work my 9 to 5 job for the rest of my life. Be miserable over there. Like, all right, have fun at that. But you can't dedicate 2 years to learning this for financial freedom? Something's wrong with you. Go buy another pair of $300-$400 Jordans. See where that gets you. You may look fly and fresh, but in that bank, you ain't about to be fly and fresh. People quit way too early. That's what I'm getting at, guys. I see way too many people come into this and they just give up. Don't give up, guys. It comes with time. It does. I wanted to quit multiple times when I was just starting out. And I'm thankful to this day I did not quit. It's going to suck in the beginning. And you're going to see a lot of people come and go in this game. A lot. 90% of people fail in the stock market and day trading. 90%. So you have to think differently. You have to show up every day. It's just like the New Year's resolution. Every year, everybody makes New Year's resolutions. You start seeing all these ads for gym memberships, right? Because they know people will sign up for these gym memberships and then forget about it. And then every month, it's getting withdrawn from their account. People will go to the gym maybe 1-2 months, and then they'll just slowly stop going. And then they'll be back into their old habits. People fall back into bad habits all the time. People are very, very content in life as well. Also, big news with Bitcoin this week. They're going to be doing a Bitcoin ETF. So last time, I think it was like 3 years ago. Yeah, 3-4 years ago, I think. They proposed to do a Bitcoin ETF, and it failed miserably. So this time, they're having an ETF Bitcoin. That's big news. So MGTX, another good move today. From 1650, runs all the way up to 19. And if you have Thinkorswim by TD Ameritrade, you can see on there it's ETB. ETE is easy to borrow. So on a brokerage, you're either going to see HTB, ETB, or NTB. And what these all mean are shares available for the stock to short. So HTB, I'm going to make that a little bit lower. HTB is going to be hard to borrow. ETB is going to be easy to borrow. And then NTB, none to borrow. So anytime you see one of these on a stock, And this is where it kind of pays to have multiple different brokers, because E-Trade could have shares easy to borrow on a stock, and Charles Schwab doesn't have any shares. TD Ameritrade doesn't have any shares. Centerpoint Securities doesn't have any shares. It varies from broker to broker, especially when trading small cap stocks. It's very rare to come by easy to borrow shares to short to the downside. So this is just one little simple technique that you could easily look out for. And this small little thing, you guys, you could consistently pull money out of the market by doing this. And this should open your eyes to how many different possibilities there is in the market. Like, you can literally develop your own trading method that you personally like and consistently make money on that day in and day out. So, if you come across the stock and it's up on the day and it says it's ETB, easy to borrow, that means they have shares readily available for short sellers to short it to try to make money on the downside. So logically, and I like to think like this, when I think of short sellers, I think they're morons. This is just me. They think a stock runs up, it ultimately has to come back down. That's the way short sellers think. If they think a stock's up for no reason, they'll short it because they think in terms of, well, gravity. If something goes up, it must come back down, right? No. Easy to borrow. We know 90% of people consistently lose money and are wrong in the stock market, right, guys? So if statistics say 90% of people lose money consistently, and we have a stock that's up and it's easy to borrow and short to the downside, people are going to overcrowd this stock and shorting it. And then that's what leads to good short squeezes. And that's what happened today with MGTX. It's easy to borrow on Thinkorswim. It's set up this morning right here. It tested high of day 2 times at $18 and failed both times, right? Then it crumbled and fell apart right here. Crumbled and fell apart. That's where shorts are all entering in on it. Or the smart shorts are buying into the pops up here. More than likely they're buying right here though at support. It goes in opposite of way longs like to buy. Longs, majority of longs, they like to buy and chase after high of day breakouts, right? So short sellers, they anticipate breakdowns. They're attacking support, hoping a stock breaks through that support and free falls so they can be in the money. Stock breaks down there all the way to 1650. And from 1650, this forms a nice tight wedge there. Comes right back up to the area where they shorted it. Now they're sweating. They're like, oh, snap. This is right back up to where I entered. I got to put my risk up here over $18. Starts to perk up, work its way up. It comes back up and tests high of day. It's really, really tight right here and gets a nice pop. And now the shorts are getting squeezed. It's not happening as big as small float stocks, but it's still happening. The float on MGTX is a little bit bigger. That's why it's not exploding. What's the float on this? I think it's like 35 million. Almost 32 million. So a 32 million float, that's a medium-sized float. That's pretty big. So we're not really going to see explosiveness squeezes like we do with our low float stocks. Like, what's that one? SG. It's JSPR. When JSPR squeezes, this stock is a low float stock, you guys. The float on this is only like 10 million. So it's 2/3 less of what MGTX is in supply. And look at the explosiveness on it when it squeezes. This thing's ripping $3, $4, $5 to the upside. This is why you see a lot of gurus. They like to pay attention to low float stocks simply because they can rip so easily, and they rip a lot. So you don't really need to buy much shares. If a stock is ripping up $3 to $5, I mean, a lousy 100 shares of this, it rips up $5. That's $500 in your pocket. That's pretty good. So all this stuff I just broke down to you, it makes a lot of sense, doesn't it? And you're probably like, dang, this dude's fucking good. Well, I've been doing this for 6 years, guys. I know what I'm doing out here. And it's easy. I'm telling you guys. Over the course of time, you just see things happen over and over and over and over and over. It's just human nature. They never change. Never. Everybody repeats mistakes over and over and over again. The consistently profitable traders, now those guys are the ones who are different. They recognize their mistakes, and we rewire our brains to think differently. We're not chasing after high of day. No, we've studied that high of day breakout. We've seen it fails every single time, majority of the time. So instead of chasing after that high of day, why don't I anticipate it, buy down lower down here, and sell to the people who are chasing at that high of day? Become the smart money and sell to the dumb money, right? ANY out here still giving good opportunity, running from 7 all the way up to almost $8.50, $9. There's been a lot of stocks in play recently. BBIG getting a nice little wedge forming up on it. And these are patterns, you guys. Everybody's taught these patterns. Everybody. Little simple wedge patterns like this. Everybody's taught to look out for these patterns. And we just talked about this. Everybody's taught to look for these patterns and know how to trade these patterns. But yet, still, everybody, 90% of people, lose money consistently. Why? They're easy-ass patterns, right? Easy. But why do people consistently still lose money? It's a psychological issue. Just because you see a pattern, you also got to think about, well, how volatile is the stock? How big is my position going to be? This stock here, this stock could rip on average 25 to 50 cents. Now, if we've seen something like this set up on a name like JSPR, that stock could rip $3, $5. See the difference there in the volatility and the range? So you might want to consider adjusting your size. That way, if something happens, if you go full size on something like JSPR, you're not accounting how volatile this name could be, and you buy, let's say, 2,000 shares, and this thing just rips from 16 down to 14.50. That's $1.50 drop, you just lost $3,000 and your heart sinks. You weren't expecting it to drop $1.50, were you? No, you were probably thinking, oh, I'll put a stop maybe 25 cents lower. There's so many little things, you guys, so many little things. Look at the death candle on this. From 1750 down to 1625 and $15. So from there to there, that's $2.50. A drop right there. 2,000 shares, that's a $5,000 loss. And it's up at its high of day. But yet, people love buying at high of day. Look at how much volume is right at high of day. Right there. Out of all this volume here, it's the highest right there at high of day. So people are not anticipating it to move from here all the way up to here. They're waiting and they're buying way up here. Start being the smart money. You're buying down here and you're selling to the dumb money up here. From there at 14 to 1750, that's a $3.50 rip to the upside right there. 1,000 shares of that, you guys, that's $3,500. That's a whole month's salary for a lot of people in one trade in a few minutes. From 11:30, I'll say. 11:30 to 12, so a half an hour, $3,500. You were making on average $100 a minute holding on to that position. And this even sets up textbook stuff. You got a nice little wedge right there, falls down, bottom. They teach you to look out for double bottoms, right? There's a double bottom right there. Stock comes all the way back up to the area it crumbled from right here. Gets a consolidation, and then that squeeze up. Then that's where it perks and catches everybody because everybody wants to chase after it because it's going higher. Remember, people love stocks that hit high of day because everybody's taught to look for stocks that hit high of day and trade stocks that are hitting high of day or new yearly highs. Everybody has their stock scanners and screeners set up to look for stocks either hitting high of day or new year highs. And you're probably like, damn, yeah, that's how I have my scanners set up. Damn, dude, you know what you're talking about. Well, yeah, dude, it's human nature and psychology. You got to think what everybody's doing and do differently because 90% of people lose money consistently. And if you don't pick up on it and adapt, then you're going to end up being in the graveyard. So respect the game, you guys. You respect this game. Take it a day at a time. You show up every day. Clear mind. You're mentally here. No distractions. Trade the chart. Don't trade your emotions. I'm going to end it on that note, guys. If you guys are new to the channel here and you guys enjoyed what you've witnessed today, subscribe to the channel. Hit that like button. Join the Trading Learning 101 Discord. We're out here every day getting it, learning, and growing as a wolf pack every day. Everybody's in here to be self-efficient, trade for themselves, have that financial freedom. We're all on the same page here. It's an everyday grind. You show up every single day. Just like you show up to your 9 to 5 every day, right? Then you expect that paycheck every Friday. My favorite day of the week now are Mondays. I used to hate Mondays. Now Mondays are my favorite day of the week. It's crazy how things turn around, and then you actually look forward to showing up to work every day. So you got to ask yourself, guys, how badly do you want this? Do you want to work for someone that you hate for the rest of your life? Do you want to live check to check the rest of your life? You tired of looking in your checking account every day to see if you have enough to buy lunch? Start educating yourself and take it a day at a time, and start surrounding yourself with people who think differently. Break away from normal. Everybody loves to just be content, settle down, have kids, lay low, work a job, punch in, punch out, earn an honest day's pay. Think bigger. Be bigger. It's up to you. How badly do you want it? Actions speak louder than words, so get to work. I'm Mr. Wolf. I hope I opened up a lot of your guys' eyes today. And as I always say, have that patience, have that discipline, and study, study, study. Peace out, guys.